Hey everyone, this is Germ with Jamaican FX. I'm so happy and grateful that I'm able to come to you guys today bringing this video. This is going to be about uptrends using market structure and zone to zone using support and resistance. And it's just going to be a basic concept of how to enter the market, where your stop loss should be, and things to look for. All right. So without further ado, let's get into it. So like I said, we're going to get right into it. This is going to be about uptrends. Now, in uptrends, we need to see a series of higher highs and higher lows. That's how we know that we can continually get into the market, just by seeing a series of higher highs and higher lows. So I'm going to draw for us now a series of higher highs and higher lows. You have your impulse up. You have your correction phase down. You have another impulse up. You'll have your correction phase down. Sorry if my drawing is not really that great, guys. Impulse up. Correction phase down, impulse up, and so on and so on and so forth, right? Now, the thing that is going to allow us to get into this market, like I said, is the series of higher highs and the series of higher lows. So I'm going to now circle for us the higher highs and the higher lows. So here we have a high, and here we have a high, here we have a high, here we have a high, right? Now, this high is higher than this high. This high is higher than this high. And this high is higher than this high. Now, also what we're going to have is a series of higher lows. So we have a low that is higher than this low, right? And then we got another low. This low is higher than this low. So these are the things that we need to see in order to get into a market, right? Now, where exactly do we get in? So glad that you asked that question. The first thing we want to do is we want to be able to understand where our resistance areas. In buying markets, we are constantly looking for the new highs, constantly looking for the new resistance areas. And I know we've seen this basic structure so many times, but this is literally all there is to trading. All right, so what I'm going to do now I'm going to actually draw zones so that you can actually see where you would get into a market or where you would draw your zones. So the market impulses up, creates resistance where the market no longer continues going up. It corrects. So at that correction phase, at the beginning of the correction phase, at the beginning of the correction phase, we're going to zone that off. Just like that, right? So in order for us to get into this market, we need to see the market trade above this resistance. Okay, that's the first thing. We want to see the market trade above this resistance. That is this point right here. So the market trades above this resistance to this point. Now we need to figure out where to create our zone. Our zone is going to be at the resistance. Where's the resistance? At the point where the market went, stopped, was unable to trade any further, and then began the correction phase. So at that point, that is this area right here. Now, in order for us to get into this market, we need to see the market create a low that is higher than the low that was responsible for the break of structure. So this is the low that is responsible for the break of structure. We know that there's buying pressure right above this resistance. We're going to wait for the market to create a higher low, and then we're going to actually enter right where that buying power is. Our stop loss would be simply right below this low, because we know in an uptrend, we need a series of higher highs and higher lows. And if this is the established low, then the market should not trade below here anymore, right? So we're going to take this trade. Our entry is going to be here. And then we're going to take the trade to this point right here. And that is the simple concept of market structure and uptrends using zone-to-zone support and resistance. I'm going to go ahead and do this next one for us. So our next zone would be right here, because this is where the market broke resistance, stopped, created this new correction phase. We now have a new low that is higher than this low, and our stop loss would be here. Our entry would be here, because guess what? We have buying pressure here, and we would simply take profit at this point. Like I said, a very basic concept of using support and resistance in zone to zone and uptrend. I'm hoping that you guys can take this and use it in your everyday trading. Thank you.